Financial Planner. Follow us on YouTube.
And today we have a returning guest, Jonathan Kaplan of Numerous Capital, the newly formed cryptocurrency hedge fund. And in our last interview, he said being in Bitcoin is like winning the lottery in slow motion. And I think that resonated with us really strongly here. And we're going to have a follow-up interview today. Last time we talked, the cryptocurrency hedge fund hadn't been launched yet. And here we are today, and it's now launched. So congratulations to Jonathan. And man, we got a lot to talk about today. Jonathan, thanks for coming on me again. Thanks
for having me, Kenneth. It was a real pleasure joining you for that first podcast, and I'm very excited to be back. There's a lot to talk about.
Well, I'd like to jump right in and get your latest thoughts on Bitcoin as it stands. And I guess it would be disingenuous to say that Bitcoin has been boring in 2018 because of the 2017 move. But it hasn't been going up hundreds of percent the way we saw last year. And I guess it's just like a market perception, right? You know, seeing the other ones creep up on it and the dominance fall down. I mean, people are questioning Bitcoin and the slowness of transactions and the fees, and people might be looking elsewhere. But I'd like to just kind of get your thoughts here in Bitcoin as it stands in 2018.
That's a great question. That's a good way to start. And I think the last time we were talking was late October, and it seems like there's never a dearth of drama in the Bitcoin world. But at the time, we had just survived yet another China bans Bitcoin event. And right now, I think we're having our own South Korea bans Bitcoin event, which, of course, I say facetiously, is it looks like they're looking more towards simply regulating their exchanges and ensuring that they're compliant with all the know your customer, anti-money laundering laws, and making sure that people aren't evading taxes and things like that, that the mainstream media blows things out of proportion, as they always do. But also at the time, Bitcoin had gone through the Bitcoin Cash fork, and it was looking towards a possible SegWit2x fork, which ended up being called off. And then we had the Bitcoin Gold fork. And so we did have a lot of drama going on. And it seems like towards the end of the year, there was some excitement where Bitcoin nearly hit 20,000 and then, of course, dropped back in a pretty steep correction. But since then, it seems like the altcoin market has certainly taken a lot of the new money and a lot of the new attention. And you're right, Bitcoin has sort of fallen by the wayside. I think at this point, all eyes are on scaling, not just for Bitcoin, for the entire ecosystem. Even Ethereum and other blockchains that have typically been faster and maybe in some instances when the Bitcoin mempool gets pretty clogged up, used for payment transfers in lieu of Bitcoin, well, even they are starting to experience scaling. So I think that's one of the big themes of 2018 is, are these legacy projects going to be able to scale? And if not, how are they going to adapt, and which projects are going to maybe start to appear or take over based on their ability to scale in ways that Bitcoin and these other large blockchains can't. But as far as Bitcoin goes right now, I think there's two main things to watch. First, like I said, is with scaling the Lightning Network. The Bitcoin Core programming community seems to have come to an agreement that they don't want to scale on chain, and that's why the Bitcoin Cash fork actually happened. The Bitcoin Cash wants to simply increase the block size, and the Bitcoin Core group wants to create a second layer on top of Bitcoin that's able to serve as essentially a payment channel, whereas all those payments that exist in the Lightning Network only get settled once they are all summed and finalized at the base Bitcoin layer. So I think we're getting close to that. I know that Lightning was on testnet for a while, and I think there's been some mainnet transactions. I don't know if that's going to come within the first quarter, but I know that the Bitcoin community is very excited about it and wants to see how that plays. So I think that's the first big thing to look for in terms of major Bitcoin news and events. The second, of course, is institutions and institutional money waking up both to Bitcoin and to crypto. I often kind of use those interchangeably, but specifically with Bitcoin, we have seen that we have the CBOE and the CME that have added futures. The LedgerX options platform is out. We're expecting, I saw that there were quite a few applications for ETFs, although it looks like the SEC has been turning down a few of those. So perhaps an ETF is not in the cards per se right now. But I think that's going to be the big picture, is how are governments and institutions continuing to adapt to Bitcoin. Right now, it looks like the Trump administration and the SEC are more concerned with eliminating scams and Ponzi's and protecting investors more than shutting down innovation in the space. So I think that at least here in the United States and in the Western world, things are looking bright for Bitcoin and cryptocurrency. But like I said, we have yet to really see what the big banks and the institutions, how they want to play this. And we do need to see what that roadmap looks like for Bitcoin in terms of how it's going to scale to the massive amount of demand that recently has come into the space. So it's a good problem to have, but a very important problem to pay attention to.
Well, you know what, the thing about Bitcoin moving down, I guess, or just all these problems, as a marketing guy, it's a perception issue, and people are seeing it and seeing Bitcoin fall in terms of dominance, and other currencies, cryptocurrencies move up, digital assets, specifically Ethereum. Ethereum is now over 50% of Bitcoin's market cap, if we would just to compare the two. And I just want to kind of get your thoughts on Ethereum. Ethereum has just moving up big in the face of Bitcoin pulling back and being stagnant some, and even a lot of other altcoins correcting over the last few days. So what's going on in Ethereum, and what are your thoughts on it?
That's another great question. I am very bullish on Ethereum. I like the project a lot. I don't know if Bitcoin and Ethereum are as much of competitors as people like to think they are. I think that there are trade-offs to be made along a variety of parameters with all these projects in terms of security and decentralization and how quickly money can be moved and things of that nature. And so there are certainly some things that Bitcoin does better and some things that Ethereum does better. But I think right now, one of the advantages that Ethereum has is that its development team, primarily led by its creator, Vitalik Buterin, is obviously a lot more visible than Satoshi Nakamoto, who disappeared into the ether, pun intended, quite some time ago. So some people might argue that Bitcoin is more decentralized and that it doesn't have one central person, leading it. And that might be true. If Vitalik were hit by a bus or assassinated, I'm sure the price of ether would take quite a hit. But at the same time, having that, I call it a benevolent dictator, in effect means that you can get everybody sort of on the same page. And with everybody looking to Vitalik, who is a brilliant person, and I think he's got a great temperament, and he really is the guy to be leading Ethereum, obviously. I think he's doing a great job. And I think that the scaling debate is really, again, a big focus right now. And people are thinking, well, if Ethereum can scale faster than Bitcoin, then maybe it can even take away some of the store of value narrative, and that once proof of stake is enacted, sometime it sounds like according to the roadmap within the next year, and there will be more or less a set amount of ether that on top of its ability to act as a base layer protocol upon which applications and products and services can be built, is similar to TCP/IP or SMTP. I think people are looking at the roadmap for Ethereum and going, well, it looks like Plasma and sharding and Casper and proof of stake and all these various means of making the blockchain more efficient are all developing rather nicely. And it almost feels like a race. Again, not that these projects are direct competitors, but I certainly could see whichever one tends to get to that scaling roadmap first. If Ethereum can enact a couple of these new upgrades and start seeing, thousands of transactions a second instead of dozens before Bitcoin's Lightning Network can get into effect, I don't think one of the projects achieving that first is going to kill the other or something like that, but it certainly would give them an added boost, and a lot of, marketing hype and attention is going to be given to whichever of these projects is able to achieve scaling first. So I think that's probably the biggest thing we're looking at. But also, and I'm sure this changes every 10 minutes with as quickly as the market caps change, but if you look at the list of the top 100 projects, the last time I checked, something like 35 or 40 of those were projects built on top of Ethereum. And for quite some time, these projects, for the most part, have been in development and, been white papers and ideas and haven't released working prototypes or platforms or betas yet. And that's starting to change. There's quite a few of these projects that are coming out with their first versions or releases this quarter. Quite a few of them are, and then certainly this year. So I think Ethereum also has a lot going for it in that it's not really just Ethereum that can do well. It's all the other projects that are built on top of Ethereum that also are going to be able to point back towards the native blockchain and say, well, okay, Ethereum's doing well, and look at all these other projects built on top of it that are doing well. That's going to be hard to ignore.
That's actually a really good point. Ethereum's doing well, and then everything underneath it is doing well as well. I guess my follow-up to that is Ethereum does have other competitors that want to do similar things. Neo's out there, Cardano, Lisk. Are these things that you are optimistic about as well, or does Ethereum have a competitive advantage that you believe will withstand all of these competitors chomping at its heels?
I think a lot about that. It's definitely one of the big questions that's ongoing as we watch this Cambrian explosion of innovation in the blockchain and crypto space. There are quite a few other competing smart contract networks, and they all have different variations and flavors and parameters that aim to solve some of the problems that have come up with, call them generation 1 blockchains. Things like EOS or Cardano or Neo or Qtum or Lisk. I think right now Ethereum is far and away the leader in terms of developer mindshare, which is probably the number one factor I would put into predicting which network is going to end up doing well in the long run, because at the end of the day, no matter how great your tech is, no matter how well thought out your idea, if you don't have people developing it, if you don't have folks building stuff, creating projects and products and services and solving problems, well, then it doesn't really matter. And so right now, there are so many people that are building on Ethereum that it's hard for me to think that one of these other projects in the short term might eclipse it. But at the same time, like we kind of already discussed, scaling is going to be a big issue. Governance in a lot of projects is a big issue. A lot of the criticism levied at Ethereum is that its governance is somewhat centralized around Vitalik Buterin, and that generally whatever he and a close assortment of programmers and confidants want to do, that's what gets done. And projects like EOS and Cardano are attempting to put into place governance features that might allow the network to bypass some of the stagnation, for example, that we saw in Bitcoin, where and people would argue that with Bitcoin, that's a feature and not a bug, that it takes so long to come to consensus, and perhaps that is a good thing. You don't want to store value that can be very easily changed. But I think at the end of the day, there's going to be room for everyone. I imagine that the space will eventually follow something of a power law distribution, where a handful of these projects garner the most money, the most attention, the most developer mind share, the most use. And then you have a long tail of niche applications that perform a very narrow function in a particular field or country. So I don't see a lot of these going away anytime soon. We do talk sometimes about the scams and the Ponzi's and the shit coins that are eventually going to go to zero. I think a lot of these smart contract networks do have advantages that will help them perform in their own particular locale. But I don't think that necessarily if we're going to see one big winner right away. Ethereum right now would be that winner if I had to make a bet going forward into the next year or so. And that's mostly because a lot of these things like EOS or Cardano are still ideas and white papers, and we still don't have working products and platforms quite yet for that. But I do think that, like I said, there's going to be space for everyone, and I'm particularly interested in the possibility, or I would even argue likelihood at this point, of interoperability. I don't think that these blockchains, these smart contract networks, are going to be isolated islands. I think eventually all of this is going to be connected, and we're looking at projects like Arc or Definity or Cosmos or Polkadot that serve to connect all these various blockchains and networks. And I think eventually you're going to have a system where everything's connected and everything is interoperable, and you're not necessarily going to have to pick between using one smart contract network or another. You'll be able to basically look at, well, what problem am I trying to solve, and what application do I want to use? And then you'll be able to use that application, and maybe you don't even know there's a blockchain in the background, or maybe you don't even know when part of the thing you're trying to do is taken care of by one network and another part's, performed on another network, and then it all comes together in a nice finished product. Just like, when my grandmother wants to send an email from her iPhone, she doesn't have to understand everything that goes on in the background. She just types a few characters and swipes her finger, and the magic of technology does the rest. But right now, I certainly think there's room for growth in the rest of these smart contract networks, but I am paying most of my attention to Ethereum.
Yeah, well put, as always. Jonathan, it seems like the overarching theme is just advancements in blockchain, or advancements in the network. That's what we've been talking about as of lately. And I want to ask you about some of these other platforms that might actually be a competitor to blockchain entirely. The first one that I want to mention right now is Tangle. I know IOTA uses that. Maybe there's other ones that I'm not aware of. But what are your thoughts on this? And do you see this and some of these other, platforms as competitors to blockchain? And is blockchain at risk of being, sidestepped by something even better?
It's a very pertinent question, as usual, and I love the question, because one of the problems I think we have in crypto is that people are by nature tribalistic, and they get very emotionally attached to their favorite project. And when new technology comes out that might improve upon that project, or when flaws are discovered, or when something comes to their awareness that maybe goes against what they already have chosen to believe, they get angry and defensive. And I think that's a big problem in investing in general. One of my favorite movie scenes of all time is when Robert De Niro in the movie Heat tells one of his partners, never get attached to anything that you can't walk away from in 30 seconds should you feel the heat coming around the corner. And I think that's a great life lesson, but it's also a great lesson for investing, and that you shouldn't become emotionally attached to something. You should do your best to take a rational, logical, unemotional look at any new information and any new projects that come out. So to be honest, I don't know as much as I'd like to about these projects. I read the IOTA white paper a while ago. And again, for anybody that's getting into crypto, read the white paper. Don't let other people tell you what to think or what to believe. Go to the website, do your own research, read the white paper, come to your own conclusions. But I read the IOTA white paper, and I didn't understand a word of it. And I've got an information systems background. I like to think I'm a pretty smart guy, but it was all high-level calculus and equations that I just didn't understand. And so after I read through it, I was on an airplane and there was no Wi-Fi, so I figured, okay, well, a lot of people are talking about this. I'm going to read through it again without trying to understand the technology, but just with the understanding of, well, how are they going to make money from this? And again, after another read, they never explicitly said, well, here's how we create value and here's how investors can make money. So after that, I kind of just shied away from the project, and there's been some drama with the development team, and there's a couple red flags that is probably enough for me. There's so many other good investments and so many other things to pay attention to that I haven't looked at that much. A good friend of mine has been talking a lot about Riblox lately, and they're apparently another DAG or Tangle. DAG stands for Directed Acyclical Graph, I believe. It's the descriptor of the Tangle technology. So I need to look into that. And for those who were maybe put off by some of the IOTA drama, it sounds like Riblox is attempting to do something similar. But again, I think that it's very interesting what they're doing with this Internet of Things space, where you could have these fast and fluid micropayments between devices, and with the advent of self-driving cars and things of that nature, I do think that there's going to be plenty of opportunity there. But again, I wish I could contribute more to the conversation, but it's something I still need to do some research on. I did read a bit about Hashgraph, which was another, quote, blockchain killer that people were saying is going to be better than the blockchain technology we have now. They have some interesting ideas with their gossip protocol that would, from their technical writings, it sounds like it would scale larger and more easily than, say, the Bitcoin blockchain. But what gives me a bit of pause, and I'll wait to see how this progresses, is that right now, from what I understand, the Hashgraph team is basically developing it in a closed source environment. And most of the crypto space, and particularly what people would consider legitimate crypto projects, are all open source projects where anybody can look at the code, anyone can suggest improvements, and so those projects benefit from all the human and intellectual capital around the world that can be put into that. And with Hashgraph, you have a team that is not providing their open source code, and they're working on it just by themselves, and they're doing it in a permissioned environment. They're allowing their technology to play in a little pen in the zoo, whereas Bitcoin was an animal that was released into the wild and had to fend for itself. And I think there's a real difference between having your project kept in a walled garden away from attackers and hackers and all the terrible things that might happen to it, and then claiming that it can be great technology, as opposed to, again, something like Bitcoin or Ethereum, which gets attacked all the time, and like we talked about in our last interview, shows that they are anti-fragile networks, and that the more they're attacked and the more people try to break or hack them, the stronger they get. They learn to survive against all those attacks, and Hashgraph doesn't have any of that yet. So certainly good to keep those things on the horizon as far as keeping an eye on them, and you should always be looking for newer and better in terms of your investor's mindset. Again, don't get too attached to anything you can't walk away from in 30 seconds if you feel the heat coming around the corner. But for right now, I don't think either the Tangle technologies or Hashgraph is set yet to dethrone blockchain as it stands right now.
Yes, exactly. It's like, let's see what happens next week, right?
Exactly.
All right, Jonathan. Well, you know what? We had some, defining news with the law regarding taxes and how the government wants people trading cryptocurrencies to report their taxes. I think we talked about this a little bit last time as well. And it seems to me like this is going to be a more of a demand, or drive more of a demand into privacy tokens in the face of government trying to clamp down on cryptocurrency, and especially control it in the sense that they don't want it getting out of hand. Anytime it moves, they want a realized gain. And I think that's the best reaction that they can have for their own sake, to attempt to keep that some sort of cost basis going, or else I think it just would get lost very quickly. Anyways, what are your thoughts on the taxes, and then as it pertains to privacy tokens going forward?
There's a lot to unpack there. The tax thing will be interesting. I think the biggest change that was released in this new 2018 tax bill is the fact that up to this point, crypto traders and investors could have made the argument. I know there's a bunch of people that are going to yell at me in the comments saying that this is not the case, and I've heard tax attorneys and CPAs and all sorts of people on both sides argue that up till that point, you could have traded crypto asset for crypto asset and argued that it qualified for a like-kind exchange under the IRC code 1031, and that it wouldn't be considered a taxable event and you could maintain your original cost basis, and that it was only at the point at which you cashed out to fiat, to cash, that you would actually be taxed on that. And again, a lot of people would say that that was never the case. So, I'm not a tax attorney. Do your own research as usual. But at least we know with this new tax bill that that's definitively not the case, and that if you do buy Ethereum with Bitcoin or vice versa, that that is a taxable event. So on the one hand, it helps clarify a little bit of how somebody like me or the people listening to this podcast might submit their taxes. But on the other hand, there are still so many unanswered questions as far as, considering mining income or staking rewards from proof of stake, or, what about airdrops? What if somebody just starts a new token and airdrops the money into my wallet? There's a lot of stuff that still has yet to be answered. And some of the older crypto guys that I know that are very much the anarcho-capitalists that want government completely outside of this, that go crazy when people call for regulations. I lean towards that area. I got into crypto because I like the idea of separating money and state, but I think this is one of the few areas where I would welcome regulation, and I would like to see some better, well-defined explanations for how all of this ought to be taxed and reported, and I think that would be very healthy for the space. What's going to be really interesting, and I think we touched on this last time we spoke, is that when you talk about big picture trends for the next year and for the foreseeable future, I think the clash between governments around the world that increasingly want to censor and control the actions of their citizens, or at the very least surveil the citizens, I think that's going to clash with the attitude and the mindset of the crypto space. And that Bitcoin was originally created as a separate financial system. And there are quite a few projects like Monero or Dash or PivX or Particle or Verge that we could call them all collectively privacy coins that in one way or another are able to obscure the amount of money being sent, or the sender and the receiver, or where the money's located. And those have done very well throughout this last year. I think they'll continue to do well. I think that a lot of times they get a bad rap, Monero in particular, because there are quite a few dark web markets that only accept Monero, for example, and that a lot of people don't realize Bitcoin is not anonymous, it's pseudonymous. All the activity can be easily viewed on the blockchain, and even though your account doesn't say Jonathan Kaplan, your Bitcoin address is a random string of letters and numbers, you can still see the amount of Bitcoin I have in an account, and you can watch it move from one place to another. Something like, Monero or Particle would not allow that. And that there are people who would argue, well, hey, look, if you have nothing to hide, then you don't have to be worried. And I would argue that, privacy is a human right, and that you have a right to keep a lot of your personal information to yourself. And as we've seen with the Home Depot and the Target hacks and the Equifax scandal, and even now with this, the Spectre and all the Intel drama, people are increasingly realizing that they need to take their privacy into their own hands. So I think we will continue to see an appreciation of these privacy tokens. I think that it will cause the friction between governments and institutions that want to know everything, to see everything, to collect all your data, to rub up against this idea of, no, I'm not going to let that happen. I'm going to control my money. I'm going to control my data. And personally, hey, I'm going to pay my taxes and I'm going to give Uncle Sam every cent that he's due. But I'm going to do my best to make sure that, again, I control my money and my data. And I think there are a lot of people that feel very strongly in that same way.
Well, I tend to agree with you on that, and I think it'll be very interesting. It's a balance of how much the governments want to enforce, and it's not like we have a one world government where everyone's on the same page. If one area clamps down, it kind of just sidesteps to somewhere else. But at the same time, it's how much are people going to comply as well. It's that balance between enforcement and compliance. So we will see how this plays out here. All right, Jonathan, we are at the 30-minute mark, and I'm going to come at you from left field here, totally out of the box, not even having to do with cryptocurrency, but because you're a smart guy here. Artificial intelligence, the future of the 21st century. We had Google's AlphaGo AI beat the world's #1 player in the ancient game of Go. And this was actually significant because this game has more combinations, if you can imagine checkers or chess, where you can pre-program a computer to anticipate every single move. This game has more combinations than there are atoms in the universe. Impossible to pre-program. And they figured out a way for the computer to play itself millions of times to learn and get better and better and better. And I just want to get your thoughts. A lot of people are worried about AI. And I mean, even Elon Musk and Hawkins have stated their concerns about where this is going. Any comments as to the future of artificial intelligence and the implications on the 21st century?
Whew, that is a hell of a question. I don't know.
I did not prep him at all for this.
Well, no, and I think it's a very interesting question, and sometimes I am a little sad in that I devote all of my time to the crypto space, and there's just not enough time in the world for me to feel like I know enough or like I am educated enough, and there's always more. And so I have no idea what has happened with politics this last year. I don't know what Trump's doing. If it doesn't make me money, if it doesn't make my clients money, I just can't afford to pay attention to it. And, there are so many interesting things going on with self-driving cars and automation and neural networks and artificial intelligence that, I wish I could freeze time and spend 6 months just reading research reports and books and papers and all that. And, well, so to answer your question, I don't know enough to have an opinion. I definitely would love to hear from people that do feel qualified to have an opinion. I'm trying to think of who said it. I have a great crypto Twitter feed, and I always forget to whom I should actually attribute these quotes. I think it was Naval Ravikant that said, in the near future, you're either going to be telling a computer what to do or a computer will tell you what to do. And so I can't comment on the technology itself, but what I can comment on, because, again, I work with 200 fraternity boys that are all undergrads and they're trying to figure out their way in the world. So in as far as I could at least give our viewers listening maybe some actionable advice, it would be that there are a lot of changes that are coming about in the world that are going to make a lot of what humans do superfluous. I think self-driving cars is a great example because driver is the #1 occupation the world around. You think about the number of taxi cabs or truck drivers, and if 5 years from now cars are driving themselves, what are all those people going to do? And I think that, in my mind, might be the most pertinent question when it comes to AI, is that if we can have robots and artificial intelligence doing a lot of maybe the menial labor or the simpler tasks of our world, well, what are humans going to be doing? And so I certainly am looking at blockchain technology as a way to cut out the middleman and replace all these centralized companies and with stronger, more secure, more decentralized projects. And if I were somebody working at one of those centralized companies, I hope they're paying attention and looking at that. And I suppose that's what I would say about AI, is that if you feel like you are in a position or an industry where eventually a computer might be able to do your job as well, if not better than you, then you need to be paying attention to this. And I think that people don't like to think about things that might hurt them or hurt their employment prospects. And like we talked about earlier, people get very emotionally attached to their jobs and their investments, and they never think, well, what could come out that would destroy this investment's potential for appreciation, or what could happen that would make my job obsolete or that would put me out of business. And as difficult as it is to think about, I think it's a very important question. And I do think that AI is one of those things that people need to be looking at very seriously, not in terms of where it is today, because people always underestimate what a technology will do in the long run, even though they tend to overestimate what it'll do in the short run. But be thinking about what the world might look like in 3 to 5 years, and hopefully you'll be able to plan accordingly. I wish I could give you a better answer.
No, that's the truth, and I think, and that's one of the reasons why I bring it up, is people need to be thinking about the future. Things are changing, and the rate of change is happening so fast, and you don't want to be obsolete to a computer going forward. And this is something people need to think about. And with people going to college, and nothing against education itself, but relevant education, staying relevant. I mean, I think, colleges are behind in so many. They're not even, in a lot of ways, they're not even talking about blockchain yet. I think they're just starting to implement that. Hey, anyways, Jonathan, in our last call, the hedge fund was not launched, and here we are today. Give everyone an update on where we are, and how they can reach out to you, and what they can learn if they visit your website.
Absolutely. So for those who might not have heard our first podcast, go back and listen to it because it was great. But no, a quick recap. My partner, Frank Gia, and I met earlier in, I was going to say this year. Now it's 2018. It's crazy. We met early 2017. We had both fallen in love with crypto. We were both managing money for friends and family. We both saw how quickly everything was taking off, and that in years prior, it was easy enough to basically keep an eye on Bitcoin because Bitcoin was, 95% of the market. There really wasn't a crypto market. And in early 2017, that all changed. And these altcoins came out of nowhere and just started exploding in value, and all these different projects came out. And so we saw a real need for people who don't have the time to keep up with the 24/7, 365 market that never sleeps, that operates 1,000 times faster than the stock market, or certainly for older folks maybe that don't feel as comfortable with the technology, to be able to outsource that to us, to people who were so obsessed with this and had so much money in it already that, hey, we're going to be spending all of our time managing our own money. We might as well do it for friends and family and people we care about that also agree with the principles and philosophy supporting Bitcoin in the crypto space. And I wish I had a more exciting update for you, but we started planning the fund in August of 2017, and we really wanted to do it properly. There was so much uncertainty, like we talked about earlier, with regards to regulation and to how enforcements might change, that we wanted to make sure that we structured it and created it in a way that we could withstand, whatever the SEC or the IRS or the U.S. government decided to impose. So we crossed our legal T's and dotted our I's, and we finally had our legal green light at the end of November and went live and, started onboarding investors. And well, to answer your question directly, we're mostly in cash because by the time we were finally able to get started, Bitcoin and the markets were very extended, and we are waiting to see this correction play itself out. I don't think that we're about to see another 2-year bear market like after Bitcoin went vertical in 2013, and then you had the Mt. Gox implosion, and you just had to watch the price fall for almost 2 years straight. I think the market's too mature, and there's too many people in the world that are interested, and there's too much going on for that to happen again. I do think that we are getting a bit overheated. A lot of new money has entered this market, and we're we have been seeing a lot of irrational exuberance, and we're waiting for a bit of that to play itself out. And I think that happened or is happening right now. So, like I said, we're mostly in cash. We started to place our initial entries in a few quality projects like Bitcoin and Ethereum and Monero, in addition to a few others. And right now, I'm actually really excited about not simply going long on projects, which has been the easiest way to make money in the space for quite some time. You buy something, you hold on to it. But I think to myself, okay, well, what if the good times don't last much longer? Because I think people assume this can go on forever, which is not the case. You're not going to have 20,000% gains every year forever. It's just not possible. Eventually the market will mature. And for those who have gotten involved, I realize myself, I'm not nearly as smart as I am lucky that I happen to find Bitcoin right after that 2-year bear market, right at the beginning of this rampant bull run. And I don't want to trick myself into thinking that I'm some genius just because I happen to be at the right place at the right time. And so the fund has been working hard on thinking, well, how do we make money in a bear market? How do we make money if prices go sideways for 6 months? And so we're looking at ways to arbitrage. We are talking with some local programmers about trading bots and, being able to trade between all the various Bitcoin and Ethereum pairs and sort of a high frequency trading setup. We're looking at options and other derivatives. We've got some folks that we might bring on board in additional partnerships, and that's all still being decided. So that'll have to wait till our next interview. But we are really looking long term into how to profit from this space. And I imagine that once the exuberance and the speculation wears off and people start looking at the fundamentals of these assets again, because eventually they'll have to, there's not going to be this type of scenario where somebody adds blockchain to the end of their company name and their stock quadruples overnight. We're more interested in, okay, what happens when that's over? And how do we make this a profitable fund, 2, 5, 10 years down the road? And of course, you can't predict that far into the future. But like I've said before, people tend to focus on where the puck is, and we're looking at where the puck's going to be, and we want to skate to that point and not get stuck in what the crowd is doing right now.
Sure.
But hopefully by the next time we talk, I'll have some more definitive updates for you and hopefully some very interesting stories.
Excellent. Well, hey, Jonathan, you guys are pioneers in this new space, and it's exciting to be interviewing you now in this time when, you guys are first launching, and I look forward to seeing how things progress out for you guys. So, hey, thanks for coming on with me today. We'll definitely have you on for market news updates and just what's going on in the space here, hopefully in the next couple months.
Absolutely. Thanks again for having me, Kenneth. It's been a pleasure as always, and I certainly look forward to coming back soon.